Okay, so let's have a look at our summary on revenue and government grants. I'm not going to go through every single bit on this, just point out the key bits. So remember, with revenue recognition, we were looking at IFRS 15, and we learnt that revenue just was one type of income. It was the income from the sales in your normal course of business, from your normal trading activities. The 5 steps of revenue are really important. It is important that you know the 5 steps and you understand what each of those steps mean. I think overall it's quite easy to understand the big picture of what revenue is and when it's recognised, but sometimes the actual breaking it into the individual steps can be the more complicated bit. So do make sure you're really happy at learning those 5 steps. We also then looked at the common types of transaction. Now remember, with these ones, they can be tested in the exam. So although they're examples of common types, they are fairly commonly examined in your exam. So do make sure you can deal with those and see them as things that could be tested rather than just little examples. So make sure you are comfortable with those as well. Your performance obligations, remember we said with these, this is what you have to do in order to earn the revenue. And we looked at these could be things that happen at a point in time, like when you transfer an item of goods, or they can happen over a period of time when, for example, you carry out a service, or maybe you build something for a customer, but they get the right to use it as the building progresses. And then we moved on to government grants. Fairly straightforward. Remember we said with the government grant we can recognise it as income when it's likely you're going to fulfil the conditions of the grant, and also you're going to receive the money. And we saw 2 main types. Grants related to income. Now with those you recognised the money coming in and you stored it as deferred income or a grant liability and spread the money over the period relating to the expense. So like if you've got grant for 3 years of wages, you needed to spread the grant over the 3 years. Remember with grants related to assets, again you spread the grant typically over the life of the asset, but how you initially record it has 2 choices. You either, very similar to what we do with income, say I'm going to set this grant up as deferred income, as a liability, and I'll gradually release the deferred income over the life of the asset. Or as soon as you recognise that grant, you could just knock it straight off the value of the asset in one go. Repayment of grants, not really examined that commonly at all. It's more the basic initial recognition that gets tested reasonably regularly. But just make sure you're happy that if you have to repay a grant, then it's quite likely you're going to have to set up a liability for that repayment. And if all that grant money has already been credited to P&L, you're going to have to charge P&L to remove that previous income.